Hi, folks. Good evening. Sorry. Just a couple of words from my side. So, this evening we're very fortunate to have Jawad Mian with us. Jawad is the author or leader of Stray Reflections. I unfortunately incorrectly characterized it as an investment newsletter, which is not true. It's much more than that. It's an investment community that interacts and where lots of people sort of share ideas and support each other. And Jawad is the organizer or the leader of the community, if you will. So this evening, Jawad will talk to us about several things. Initially, the idea was that he would talk about the ever-changing Zeitgeist, and basically, every decade it seems like there's an investment theme that morphs into a mania. In the 70s it was gold, in the 80s it was Japan, then there was the internet. So hopefully he'll maybe give us some ideas as to what that theme or mania might be for the 2020s. And then there are two other sort of topics he will cover that actually I'm not sure what they are as of yet, but they'll probably be equally as interesting and informative. Also, for those who'll be watching this on our YouTube channel, please feel free to go to www.lomlausanne.ch for more information. Also, for the folks that are here, we have now introduced a functionality for donations. Obviously, everything is free and open for everyone, but to the extent you feel that what we do is useful and important, if you have any desire, feel free to support us. There's on the little table out over there, there's a twinned QR code, so any help would be greatly appreciated. And so without further ado, I pass the floor to Jawad. Thank you.
Thank you. Since we are in the Library of Mistakes, I thought we'd begin with a quote that I think about often. To err is human, to forgive divine. Because I think the sort of discussion we'll have going forward, it's important to remind ourselves of self-forgiveness and compassion. We need a lot of it, I feel, in the coming years. So the quote has nothing to do with the presentation, but a lot to do with, I guess, the emotional state we all need to sort of find ourselves in again and again. Just a disclaimer, do not do this. I'll share my thoughts, and look forward to engaging with you as to how you think about it. So as Boris was mentioning, every decade there's an event that happens that triggers a trend, which eventually turns into a powerful narrative and mania. And it's very interesting that these literally last like a calendar decade. So in the 1970s, the major event was the breakdown of Bretton Woods in 1971. And that was what triggered the dollar devaluation, and it led to a gold bull market. And in 1980, gold peaked. And 1980 onwards is a horrible investment. You want to avoid gold. The zeitgeist of the 1980s was Japan's taking over the world. Back then, Japan was America's toughest competitor. Kids were told to learn Japanese. Japanese were the villains in American movies. Japanese were buying American real estate. It was Kaizen, the magic techniques that were being taught around. But 1989 onwards, that stopped working. The zeitgeist for the 1990s was best articulated with the dawn of the internet. And so the simple theme was to be long NASDAQ, the Netscape IPO. And then that peaked in March 2000. Again, these are 10-year trends. So Japan was a disaster after 1989. Tech stocks were a disaster after March 2000. And after this, the zeitgeist in the 2000s, the major event then was China's entrance into the World Trade Organization in June of 2001. And now you were going to have the dawn of a new dynasty. China becoming the world's second most important, largest economy. So you want to be long what China was short, basically. You want to be buying China, emerging markets, commodities. You had this bull market. Commodities by the end of the decade became an institutional allocation in every portfolio. Emerging markets were treated as having really figured out their finances and were, according to this magazine cover, the new masters of management on the innovation happening in emerging markets. And I think we all know the last 10 years how all of this has sort of fallen aside. right? So 2011 onwards, commodities have been in a bear market, emerging markets have been in a bear market, China has been structurally slowing. So this stopped working. The zeitgeist of the last decade was best articulated by the venture capitalist Mark Andreessen in 2011 in a Wall Street Journal article titled "Software is Eating the World." And this is an excerpt from that article. So if you just read this paragraph, it's extremely prescient as to what ended up happening. And if you just read this and acted on this, you would have had financial gains that would be tremendous. So he predicted in 2011, more and more major businesses and industries are being run on software and delivered as online services, from movies to agriculture to national defense. Many of the winners are Silicon Valley-style entrepreneurial technology companies that are invading and overturning established industry structures. Over the next 10 years, I expect many more industries to be disrupted by software, with new world-beating Silicon Valley companies doing the disruption in more cases than not. And that's exactly where we are. That's exactly what happened. But the contentious argument I make is that this zeitgeist has ended as well. And it ended in 2021. And that may seem odd to a lot of people because, wait, isn't America still the best place to invest? Aren't the Magnificent Seven companies, Google, Microsoft, Amazon, Nvidia, aren't they all near all-time highs and still institutional darlings? And I'll explain why my perspective on that is a bit different. But I think it's important to know that the tech zeitgeist ended in 2021, and this decade that we're in today, there's something else going on, and it's not tech. The best decision you can make as an investor is to avoid the zeitgeist of the previous decade. That's one of the lessons from this exercise, right? Like after the 10-year period's over, the best thing you can do is just avoid that and own everything else. You'll do fine from an asset allocation standpoint. But the common mistake people make is because you've had these 10-year trends, you've built your reputation, your businesses, your career, your wealth on profiting from these trends, it's difficult to dethrone dominant beliefs and behaviors that have served you well. A lot of people don't have that existential flexibility. Their identity is too much tied to what they know. So it's difficult to take a leap into capturing different zeitgeists. And I'll explain why I think, structurally this is over. So the question is, so this is basically what happened, right? In the 2010s, it was the age of the unicorns. Masa, WeWork, The question is, for the 2020s, what is the zeitgeist? Because we have these established, clear 10-year trends, firstly, it's just a question worth exploring amongst yourselves, amongst your teams, like what could be the zeitgeist for this decade? Here, identify 3 candidates, right? The first is AI, which is seemingly the obvious one, and you could mark the ChatGPT launch as the trigger date for that. A lot of people hope that it is AI. It'll be an extension of the previous zeitgeist, and so a lot of folks that were feeling pressure in 2022 in the TMT tech venture capitalist space who were suffering major losses in their portfolios want this to be true deeply because it sort of helps them bring their business model back and continue doing what they're doing effectively. That is one idea. I don't think it's the case, but that's certainly one possibility. The second idea is climate, and the trigger event there was the pandemic. And like it says over here, how the pandemic can lead us to a better, greener world. Climate is everything. And a year before this, Greta Thunberg became Time Person of the Year. So there's something going on with climate, I think, which is important because post-pandemic, climate became sort of this global priority, which has taken a back seat in the last couple of years. But it certainly felt like global emissions are declining. Certainly all governments are sort of powering ahead with the climate agenda. That's the second the candidate, in my opinion. The third is the obesity drugs, the GLP-1 drugs, Novo Nordisk and Eli Lilly, which I think could be another powerful 10-year trend. And there's lots of innovation happening in health, and I think the GLP-1 system is just the beginning with obesity, and there's so many other treatments that I think are going to follow. So each of these are strong candidates, and so we, in our community, we've talked about how the Zeitgeist portfolio would be owning these 3 stocks: Nvidia, for climate, I would say it's BYD, and Lilly or Novo. And you don't know which one's going to win, but own all these 3 names. But I do think there is one which is predominant over the others, And I'm curious if there's anybody here that has a sense of, like, if you were to bet, like, let's go around the room, if you don't mind. Like, let's go around the room. Which of these three do you think it is? And we go one by one. What do you think it is?
The diet, eating.
What about you?
I would go for AI.
AI.
I would mention that restart of military conflicts.
Yeah, that could be defense. That could be another one, yeah.
I will go for diet and pharmacy.
Okay, health.
I go for AI, although for me it's a bit an extension of the tech.
Yeah.
But also, I'm not really sure it's a neutral.
What about in behind?
AI.
AI. What's up? AI.
For me, I don't think it would be AI. So it seems like, to me at least, that it should be between climate and the other one,
Okay.
the drugs.
How about you?
Health.
Health?
AI.
Yeah. Boris?
I probably would agree with Matthias that it's maybe sort of geopolitical, sort of
Right.
the end of the peace dividend and living in a world where all of a sudden defense as a percentage of GDP has to be 2, 3, 4 times as much as it was since the fall of the Berlin Wall.
Right. Maybe?
What do you mean by climate exactly?
The climate-related investments. Like that is going to be the main driver of how flows and
Financial return.
financial returns. Yeah.
I'm not really drawn to
Any
any
of
of
them?
them.
You have an
And I
idea?
think it would be close.
Defense.
I wouldn't say the word defense, but like a reordering of the world.
Okay.
And all the supply chains and production and everything shifts.
Yeah.
The barriers come up.
Yeah. What about you?
Yeah, I think it's more like resources than needs.
Okay. What about you, sir?
Yeah.
Oh, AI?
Yeah. Climate. Sustainability.
Basha?
AI, 100%.
Yeah. What about you?
I think it's drugs.
Health?
Yes, the health.
Health. So who said climate? 1, 2. I'm the third person who says climate. So I actually think it's climate. You know why? Because climate is causing divorce amongst albatross. It's making pigs skinnier. It's making horses fat. If you've had a migraine recently, it's because of climate change. Depression, strokes, it's all related. Dogs are being depressed. I mean, this is a very serious issue. It's become such a cultural sort of phenom that climate is being blamed for all of these things. But jokes aside, I think it's climate. And the reason I think it's climate is now that we have sort of made climate change this sort of global economic and social opportunity where it's no longer a cost, it's a solution for jobs, it's a solution for spending. On the back of climate, we can justify more fiscal expenditures, we can offer subsidies and energy subsidies and green subsidies and so the way I would define climate is almost like the catchword is the race to zero emissions, the race to zero, and the global energy transition. So it's broader than just climate, but it's basically how do we get to zero emissions and the energy transition, how does that happen? And so you can see here, every decade was the key asset to own, right? So it was gold, Japan, NASDAQ, oil, FANG, market cap. And then the last box is, for me, what I've identified, BYD is the Chinese EV maker, battery maker. And it could be a number of things there instead of BYD, right? It could be carbon credits, it could be copper, it could be different things. But what's interesting is if it's climate, because we don't know the answer, we won't know until later, it's all conjecture. But if it is climate, what's interesting about this is that because tech and software was last decade's zeitgeist, Silicon Valley was the most important geographic location in the world because that's where innovation was happening. But if it's climate, then China becomes the most important country in the world because China is the renewables superpower. Because if it's climate, the solution is not going to be technological, it's going to be industrial. It's not going to be venture capital, it's project finance. And what's interesting to me is that if we are in an AI-powered bull market, so if we are in an AI bull market for the last couple of years, why is it that the German DAX has outperformed the S&P 500 in US dollar terms since ChatGPT was launched. That's odd, right? Why is that happening? Why is gold keeping pace with US equities over the last couple of years if we're making this new technological leap? Something is off here in the last couple of years in the way markets have moved, and I'll get into explaining why. But I just wanted to leave you with this thought firstly about just think about Zeitgeist. What could it be? Maybe it's something else than what we discussed over here. But my candidate would be sort of climate and the energy transition, which makes it really important to understand what China is doing around climate. And so yeah, that's the first thing. Just sit with that for a bit. The second thing I wanted to discuss was this idea of the American myth. And this will go into explaining some of these sort of weird market moves that we're seeing. And because again, like the question could be, it's AI, and we're still in this amazing American exceptionalism period. Every time I come to Europe, I find people very pessimistic about Europe. And yet what I discover is at a time when you've got a war going on nearby, you've got China really weak and taking market share away from European companies, as well as sort of suffering consumers and profits for like a lot of leading European companies. You've got fractious politics across the continent. You've got lack of fiscal spending happening. Why is it with this sort of weird 2-year period, crippling energy prices, regulation still an issue, lack of sort of cohesion? Why is it in this environment that German equities are outperforming US equities? Why is it that the euro is up 11% over the last 2 years, despite the war, despite energy crisis, and all of these things? So I often like to think that the market is telling you something. And what is it telling you? Either things in Europe aren't as bad as people say in everyday conversations, or maybe, just maybe, America isn't as exceptional as we perhaps like to believe. And because if you think about the fact that 2021 may be the end of the American tech sort of zeitgeist, then this becomes very relevant. Because you have to sort of figure out a way to argue that non-US will do better than US. So let me first take you back in time and understand where we are in the sort of American arc of history to get to where we are likely going next. So I'm going to read something from a book. And the book is called The End of Myth, From the Frontier to the Border Wall in the Mind of America. And in that book, acclaimed historian Greg Grandin describes how America's constant expansion, whether through land, trade, or militarism, symbolized a future of boundless potential and served as a basis for its belief that it is an exceptional nation. Right? So now let me quote from the book. No myth in American history has been more powerful, more invoked by more presidents than that of pioneers advancing across an endless meridian. Onward and then onward again. There were lulls, doubts, dissents, and counter-movements, notably in the 1930s and 1970s. But the expansionist imperative has remained constant. In one version or another, for centuries, as Woodrow Wilson said in the 1890s, a frontier people always in our van is so far the central and determining fact of our national history. There was no thought, he said, of drawing back. And when the physical frontier was closed, its imagery could easily be applied to other arenas of expansion, to markets, war, culture, technology, science, the psyche, and politics. In the years after World War II, the frontier became a central metaphor to capture a vision of a new kind of world order. Borrowing frontier language used by Andrew Jackson and his followers in the 1830s and 1840s, post-war planners said the United States would extend the world's area of freedom and enlarge its circle of free institutions. Past empires established their dominance in an environment where resources were thought to be finite, extending their supremacy to capture as much of the world's wealth as possible, to the detriment of their rivals. Now, though, the United States made a credible claim to be a different sort of global power, presiding over a world economy promised on endless growth. Washington, its leader said, didn't so much rule as help organize and stabilize an international community understood as liberal, universal, and multilateral. The promise of a limitless frontier meant that wealth wasn't a zero-sum proposition, it could be shared by all. That's a really nice way of describing the sort of philosophy that underpinned American sort of exceptionalism. And I think what's interesting is, again, this is Woodrow Wilson, we have no selfish ends. We desire no conquest, no dominion, no imperialism. We seek no indemnities for ourselves. That was sort of the vision with which the expansion happened, and that was what led to the sort of Pax Americana period, which was this period of global prosperity, global trade flourished, the UN, WTO, IMF, all these bodies were created to really facilitate global trade, and the US was seen as a benign hegemon. Everybody was willing to give up a little bit of their sovereignty to subscribe to this new global world order. And it was like a fantastic period for global markets because it was all about prosperity and global trade and people coming together. The first strike to Pax Americana was delivered on 9/11. And it was the September 11 attacks. More specifically, the response to the September 11 attacks. Because once the terror attacks happened, the logical, rational response would have been to go after the terrorists in a very clandestine way, break the terror cells, and figure out sources of funding and go after them. But instead, when you've been hit with such sort of magnitude in terms of scale and vision and sight, you have to do a counter that is almost like theatrical. And so you invade Afghanistan, but at the same time, you've got Bush here digging out and digging in for war. So the war drum started really beating. And apart from Afghanistan, the rhetoric turned towards Iraq. And the UN was against it. Germany, France were against it. Millions of people globally protested against it. And it became the first instant where the US decided to move away from the rules-based order they had created. They were going to go against what the UN said, what their allies said. They were going to do things unilaterally. You're either with us or you were against us. And when they invaded Iraq, all of a sudden it became clear for lots of people that, wait a minute, sovereignty is no longer sacrosanct. You can just be invaded. And that was quite significant. So despite global protests, despite the rules-based order they had built, they completely overturned it in response to 9/11. And the myth, what was the myth? We will extend the peace by encouraging free and open societies on every continent. That's what he said. And that was sort of the basis of let's free Iraq. What ended up happening? There were no weapons. You suddenly realize there are no universal rights. That's a myth because the way the war was conducted, the loss of life, the torture in the prisons, the stories there, the wasteful money that was spent, the lives that were lost, and the vision turned into, again, all the president's mess. So it completely backfired. And it gave rise to the strongmen. Because again, once your sovereignty is no longer sacrosanct, you can't trust America as a benign hegemon. And that's when the multipolar world actually begins. It's become more commonplace to talk about the multipolar world today, but the beginning of that was actually 9/11 onwards. And 2010 onwards when it became really clear. That was the rise of, Putin, Erdogan, Modi, Xi, Orban, MBS in Saudi, bunch of others. And now you had the multipolar world. But that was strike one. The response to 9/11 was strike one on American exceptionalism, the American myth. Strike two was in 2009, in 2008. It was basically the subprime crisis. When all of a sudden you realize that America, which is supposed to be the leader of the laissez-faire capitalism, was responsible for bringing the world on its knees. It was US subprime mortgages that destroyed the global economy. And China suddenly realized, wait, we can't trust American banks or the US dollar. And so we need to find our own alternative, and thus began the desire to internationalize the renminbi and to settle more trade in yuan. And it was 0% back then, and now it's close to 30% in goods. So that was strike two, when you realized you can't trust global economic management and you need a different system. And America is not going to, the SWIFT, the banks, they're vulnerable. And then as you went through the decade, what you also realized was this moment was important. And I love this. There's no sequence of articles that I love, magazine covers that I like that are better than this, just to teach us humility. Especially as we think about November election, right? So this is like Trump meltdown, total meltdown, and then you actually realize he's won the election. And so it's very interesting thinking about November, like where do we stand, where's consensus opinion? And given that every election year to date has been filled with some political surprise, I think we have to expect some surprise in a few weeks in the November election as well. But Trump further retreated. He talked about Fortress America, becoming more isolationist. He broke up our trade agreements. There were no such thing as allies anymore. It was my interests come first. And so he accelerated the decline of Pax Americana. So that American myth of keep expanding was sort of being torn apart. And the border wall is a good emblematic of that entire sort of dynamic. With the election of Trump, America found itself at the end of its myth. Gordon says, the author I was reading at the beginning of this section, in his opinion, the border wall is a monument to the frontier's final closure. A symbol of a nation that used to believe it had escaped history, but that now finds itself trapped by history. People who used to think that they were captains of the future, but now are prisoners of the past. So there's a very interesting symbolism behind the border wall and how we've sort of gone from expansion back to retreat and into this sort of Fortress America. And what that means for foreign policy, what that means for financial flows. Biden came and he did not reverse any policy. The border wall kept being built. So it's not like anything has changed since then. And then in 2021, America decides to leave Afghanistan, embarrassingly. So just like, the idea 100 years ago was there's no drawing back. Here was America drawing back, having left Iraq and now embarrassingly leaving Afghanistan, giving it to, the same folks that they were fighting 20 years prior, the Taliban, right? So this is, again, a classic picture, I feel, that describes that. And this is strike three. So in 2022, Russia invades Ukraine. So strike one was the response to 9/11, when you realize politically America cannot be trusted. Strike two was GFC, where you realize economically America cannot be trusted. This is strike three. When Russia invaded Ukraine, in response, America decided to sanction Russia. And this is what President Biden said: "We are joining with our European allies to find and seize your yachts, your luxury apartments, your private jets. We are coming for your ill-begotten gains." People trusted in America's international property rights. Right? That was one thing you could count on. You could buy US real estate, financial assets, and they will not be confiscated. This is a free world. And suddenly you realize you can't do that anymore. And that's significant. Sanctions here were strike three. And that to me was the end of American exceptionalism, the unraveling of the American myth. And the unraveling of that American myth happens not with a declining stock market so much as it does through a declining currency. And so since 2022 is when the dollar peaked. A lot of focus on the US and the US equity market, but we don't realize the dollar actually peaked in 2022. A few months after this event occurred, which led to record central bank buying. You can see in response to this, 2022 and 2023 was record central bank buying. So far this year, the first half gold buying has exceeded the first half gold buying in each of these years. So this trend is continuing. And it's a function, the reason gold is doing well is because of this unraveling of the American myth. I often like to ask the question, what is happening that shouldn't? What is not happening that should? And what's interesting about that is if gold is at $1,900 in 2011 and the dollar index is at 72, and then 10 years later, the dollar index is above 110, and gold is at 2,500, 2,600, what's going on here? Gold is shrugging the dollar rally and still rallying. And I think this is the kind of dynamic that's at play here, structurally in the backdrop, whereby the dollar is in a structural decline that began in 2022, and gold is sort of reflecting some of those moves. And the other interesting thing to keep in mind right now is this chart, which is showing you the 1-year US CDS rate, which is breaking out, which is basically the risk of it's the risk of a default, but more specifically, the way I think it captures the essence is simply the risk of concern around the deficit and American government finances. It was a CDS that blew out in Europe during the 2010s when you had the sort of Greek crisis, and then sort of the other peripheral countries faced crisis as well. And now you're seeing the CDS rate in the US start to spike. Some of this could be related to the upcoming election and hedges and protection and whatnot, but it is something to watch, because I think this is another way it starts to reflect the end of American exceptionalism and the American myth. And next I'll explain on the equity story more specifically, but I think that's something to keep in mind as well. I'll pause if there are any questions in this section before moving to the third one. If anybody wants to. You're good? So the first section was talking about how the tech American Zeitgeist is over. The second section was trying to explain why it, structurally, fundamentally, politically, we sort of have reached this end of this sort of exceptionalism period. Now I wanted to get into more sort of what this means financial markets wise in the next sort of year to 5 year type period. And the previous section was basically the 3 mistakes that America did, right, which has sort of cost it its exceptionalism. Now there are a couple of beliefs in the marketplace right now, and you hear often this idea that the launch of ChatGPT and AI has brought us back to the 1995 moment. I've often heard this phrase that we're back in the 1995 moment. And when people say that we're in the 1995 moment, they basically mean back to Netscape, the internet, and this led to this sort of incredible bull market in equities. And we're just in the starting phase of like a multi-year bull run. That's where the 1995 moment phrase comes up again and again. And so there's some folks that expect the equity market to triple between now and 2030. There are others who expect it to get to 10,000 by the end of the decade. So basically the argument is, because it's the 1995 moment, it had a 5-year bull market to 2000 top. We are in 2024 now. We've got 5 years of amazing returns ahead of us. That's sort of the consensus opinion that I hear. And I'm going to sort of try to challenge that, right? So in 1995, the reason they bring that up is because in 1995 is when Netscape went public. Netscape was the internet browser. And that was a very important moment because Kleiner Perkins invested in Netscape at an $18 million valuation, which had no profits, no revenues. It was more of a concept at that point in time. But it was such a huge deal in that era that it really set the trend. And people realized, wait, maybe at that time everybody was building around this idea that the future is going to be this integrated TV. They thought that the television is the real technology that people are going to innovate around. Once this happened, once Netscape came about, they realized, oh crap, actually it's the internet. So Oracle, Sun, Microsoft, they all reoriented their internal strategy to focus on internet. That's the real threat. That's what you've got to build for. So Netscape is the 1995 moment that we are referring to today. But what's more interesting to me is not the Netscape IPO in August of 95. What's more interesting to me is the Yahoo deal that occurred in November of 1995. Masayoshi Son, on the right, is the founder of SoftBank, and he, in 1995, comes to the US, meets with Jerry Yang, and he invests a couple of $1 million in Yahoo. In March of 1996, like literally 3 months later, he gives them a $100 million check. saying, take this money and give me a third of your business. And again, just keep in mind, Netscape was valued at $18 million a few months before, and now here Yahoo is getting a $100 million check. And they're like, dude, we don't need this money. Like, what are you doing? He's like, and Masa's classic response was, everybody needs money. And that was the beginning of this sort of idea of like scale, grow. And it created this sort of factory almost of dot-com companies, which Wall Street was churning out. And the entire psychology changed towards growth. They didn't care so much about profits. It was more about just grow revenues, show what you're doing, how you're going to change the world. And that was going to be it. So Masa entering in 1995 and completely changing the funding dynamics, in my opinion, had a much more profound impact on psychology. Because bubbles, and I think this is an important point, bubbles are not about technology. It's not about the internet or the AI. Bubbles are about psychology. And that's what the Zeitgeist shows you. It's the psychology that shifts. It's not just the technology. We like to obsess about the technology because we want to understand it. We think it's intellectual, but it's really, at the same time, we're making the same mistakes over and over again. It's psychology. And the reason that's important is, for me, the 1995 moment of Masa arriving and buying a stake in Yahoo is not the ChatGPT moment. The 1995 moment, in my opinion, has already passed. The 1995 moment in our cycle was 2017, when Masa showed up with a $100 million vision fund, and he started buying all sorts of companies, Uber, WeWork, and expensive valuations, and AI traffic. I mean, that was his chart of hunting unicorns, as you like to say at that time, and it was him encouraging founders towards limitless growth. And dream and vision bigger and bigger and bigger. Between 1995 and 2000, it was a public market bubble. It was like Wall Street churning out IPOs, The difference in 2017, 2021 was it was more private markets. So just like a lot of companies were like doubling, tripling, quadrupling in the public markets in the 1990s, now it was happening in private markets. So companies were quadrupling their valuation within 18 months, within 6 months, within 12 months. Bird, as the electric scooter company, was an example of that. Others too. And so the bubble was simply happening in private markets. So most people in the public markets weren't aware of the extent of which things were quite crazy. But again, the point I'm trying to make here is the 1995 moment is not just about technology, it's about psychology. And it's almost like the clock starts ticking when Masa arrives on the scene with his checkbook. And he did that in 1995, and he did that in 2017. And it led to the 5-year sort of frenzy, climaxing in 2021, just like it climaxed in 2020. In 2000, I mean. And in 2000, Masa was said to own 7% of all publicly listed tech companies. And same thing with his sort of $100 billion bet. That was the idea. He wants to own a piece of global internet. Both were disasters. But I think that's one important point. In my opinion, a contentious opinion, the 1995 moment is past us. We're living in a post-bubble reality. The 1995 moment begins when Masa arrives on the scene. A more relevant comparison, in my opinion, than the 1990s is the 1960s. And then in the 1960s, we had the bull market, which was referred to back then as the go-go years. And the go-go referred to like the sort of momentum style of trading, very fast, very quick, speculative growth stocks. And this man is called Jerry Tsai, who was a Fidelity mutual fund manager, who became the hotshot. He became the star of that bull market. Every time he would buy, people would follow and chase his ideas. He moved the market with his sort of commentary and with his trades. And he became so popular that he set up his own fund in 1965. He thought he's going to raise $25 million. He ended up raising $250 million. On the right is a person called James Ling. The other thing that happened in the go-go years was the conglomerates boom. And the conglomerates were essentially the SPACs of that era, which was basically two-man companies that were buying companies, all sorts of different ones. And James Ling was, called the merger king. And he was known to own everything from like defense companies to potato makers to tennis courts to all sorts of businesses under his conglomerate. And so again, it was this period of basically, what John Brooks at the time describes as show-offs and shenanigans. It was financial engineering, trying to get rich quick. So those are two major trends, the growth style investing, momentum investing, and then sort of the conglomerate boom. And the third thing was obviously the retail trading. There's a new entrants that had arrived in the market and were really participating for the first time ever. And the comparison to the present is, we argued, and we were writing about this at the time, is that Cathie Woods is the star, or was the star of our market, which was the YOLO market. You'll only live once. That was a post-pandemic sort of environment that we were in. So Cathie Woods is Jerry Tsai. And ARC Innovation Fund, the assets for the ARC Innovation Fund went from $5 billion to $85 billion in 18 months. The go-go funds of the 1960s era, they had assets of about, I think it was 200 million, and they went to 3.4 billion. So in both cases, assets went up 17-fold in the go-go years and in the YOLO years. And then once Jerry Tsai launched his fund, eventually he lost 80% of his money, of the fund value, because markets went down and his stock picks suffered. Same thing with Cathie, she's down 70-80%, from the 2021 highs. And then the second here, you had the merger wave back then, the conglomerates boom, and we had the SPAC boom. And Chamath became the face of the SPAC boom. And the SPAC boom turned into a bust. And lots of, crazy money was raised in a few short years with ideas to build all sorts of companies, from space infrastructure to movie theaters to all sorts of stuff. But again, it's been a disaster from an investment standpoint. So that's the comparison. Then again, obviously we have the recent experience of retail traders once again becoming very, very important in the market. So again, the 60s era to me is very interesting compared to where we have been most recently. And that matters because I think this is the important point. The bear market of 1966, during which the S&P 500 dropped 24%, lasted 8 months. It was not followed by a recession. Instead, a new bull market took place. And from the low to the high, the S&P 500 rose 51%. And this is what happened in our time, right? So in 2021, markets peaked. In 2022, markets were down 27%, I think, over 8 months as well. Again, no recession followed. And we are now in this new bull market, which some would say is an AI-related bull market. We're still in the American sort of exceptionalism, outperformance world. So in both cases, 1966 and 2021, an 8-month bear market, 25% plus drawdown, no recession followed. What happened next was, in 1966, you rallied 51% to a new high that was 16% above the 1966 high. So in 1968, you went 16% higher than 1966. 68 high was 16% higher than 1966 high. A lot of the growth stuff was still struggling, but the market was higher because the concentration breadth was a bit different. And it's, again, similar to 1968. Today we are 16% roughly above the 2022 high. And so for me, I believe what comes next is not 1995. We're actually in 1968. And I think that's the kind of a scenario that I want to sort of leave you with, is to prepare that what if we're not in 1995, we're actually in 1968. And the reason that matters significantly is first, you have to realize that this 2021 peak was so speculative, the climax, the speculation, that once you've had a climactic event like that, the energy that is exhausted, it becomes difficult for what follows to have like a multi-year cycle. It's likely a smaller new high and then you go down again. And why that matters is because what comes next is a 2-year, in my opinion, a 2-year bear market where you're down 25-30%. So from around these levels, maybe another 5% higher, what I expect will be a 2-year equity bear market where you're down 25-30%, Why is that important? Because if you imagine that, that's like 2027 where you're bottoming out. And then on average, it takes you about 2.5 years to climb out of a bear market, which brings you to 2029, 2030. Which is to say that right now, we could be in the process of seeing highs that we won't see for the rest of the decade. And that is a perspective that is not discussed, talked about, imagined at all in the media, conversations generally, research reports. And I think it's something to consider. It is better to be prepared than surprised. And that's the mistake you want to avoid. And that's what I wanted to leave you here with, was understanding that it is possible. What if, we are setting highs in the equity market, which will not be revisited for the next 5 years? Are you mentally prepared for that? In your life cycle, in your financial savings journey. The mood is going to be really crappy if this actually plays out politically, socially, economically, right? But to me, that is sort of the base case scenario. And I think it's one that I want you to sort of consider as a plausible option going forward as well. And one last thing I'll leave you with is also trying to imagine, because sometimes it's very difficult in real time to navigate markets because there's so much volatility, so much going on. But imagine something like this happens. Now, this is an example of what happened in the 2000 topping process and how difficult it was to navigate that topping process. Just look at what happened in the course of a year. S&P went from 1478, it goes down 10% in February, climbs 17% in March, falls 13% to April, rises 13% by July, dips 7% before rallying 8% by the end of August, back to where it was at the beginning of the year, and then you begin a prolonged decline. Let's just imagine the mental fatigue of living through this and trading this. And so I think it's likely that we are entering a period where we'll have a 2-year bear market, but it'll also be very choppy and confusing. Because of the powerful AI narrative, it'll be difficult to actually believe that, how can we be in a bear market with such powerful forces? We won't know if we're in a bull market or a bear market, given this sort of choppy action. We won't know if we're in a recession or not in a recession, right? But I think, again, it's just important to just imagine going through this and trading through this. And what kind of sort of mental fortitude, preparation do you need? So I'll leave you with that, just to keep in mind. And I think that kind of ends it for me. So thank you very much. Thanks, man. Yeah.
So thanks for the presentation. Really interesting. I have a question. Going back to the beginning where you picked the 3 candidates. What do you think of this? Because I think it sort of reflects this. There's like for lack of a better term, I'm going to use the word obsession with like a silver bullet to solve things. So in the US there's a obesity epidemic, so we invent a pill to solve it. Instead of looking at the agricultural system, medical system, etc., etc. And then also the climate topic, because I'm very critical of the climate, the whole climate thing, because my father is a soil scientist, and so I grew up with him looking at soil quality and water quality. These were very important things, and they used to be considered to be important by governments all over the world, and now we've forgotten about that. We obsessed with carbon emissions and then selling. Then you look good when you buy a BYD or a Tesla. I'm a good person. I care about the climate, even though if you look at the whole supply chain, it's causing a lot of damage to soil and water in many parts of the world. But just my question is, what do you think of? Do you have any reflections on this obsession with like a silver bullet to solve everything?
I mean, one of my principles is you focus on things as they are. Like I think part of my approach is I'm not ideological. I'm not dogmatic. I'm agnostic. I'm independent. And so I think whether climate change is real or not is not an interesting debate for me. For me, what matters is what's sort of actionable and what our government's focused on and what our financial flow is focused on. And that's what matters. The philosophy, the intellectual arguments, the philosophy around it, to me is irrelevant. Is it a powerful trend? Is it going to happen whether it's right or wrong? And I think that's what I focus on, because it's, for me, given the bandwidth, you have to focus on what matters. And the debates of what's right or what's wrong, irrelevant. Can I influence change there? No. And my task is to help people find clarity amongst these sort of big things, right? So it's more, the way I approach it is, again, there's a saying, show us things as they are. Oh God, show us things as they are. And for me, that's my daily prayer, not as I wish them to be, right? So I have no agenda in Trump winning or Harris winning. I'm going to have my objective view. I have no agenda in what's going to happen to climate, but I can sense where patterns are occurring. Same thing with obesity, right? Is it the right thing or wrong thing? Lots of side effects. Doesn't matter. Is Eli Lilly going to be a $2 trillion company? That's what matters, right? Is social media good for you or bad for you? That's another debate you could have, right? But it's irrelevant. It's sort of where economic forces are leading trends and how you can sort of benefit, or if you want to avoid, just avoid.
Thank you for the presentation. If we extend the thought process, what I understand is that whoever wins, Harris or Trump, doesn't really matter. If climate is the next decade's big thing, does it really matter? It matters,
and the reason it matters is because Harris is a climate president, Trump is not, and so if Trump wins, then maybe I'm wrong about climate being the zeitgeist, because the climate stuff will take a backseat to other things, right? And a Harris win would double down on climate policy and spending on the back of that. So I think the election matters from that perspective for sure. I mean, there are lots of ways the election matters, but because again, it's very difficult to know. Like, it was very difficult to know even up until 2015. It's important to understand these zeitgeists and talk about them. But again, in the moment, it's difficult to have conviction and hold. Like, even in 2015, it wasn't obvious that America was going to be the winner and software was going to be the zeitgeist. In 2015, Bill Gurley of Benchmark was calling Silicon Valley a bubble. In 2015, Carl Icahn sold half his Apple stake. Sold all his Netflix stake. In 2015, 5 years before the top, So it's very difficult to know in real time. So maybe climate isn't it. It's something else that I haven't thought about. So if Trump wins, then I'd have to rethink it, that it's not climate, it's something else.
So my question was relating kind of to this, is to what extent regulations will have in climate economy will have an impact on the value of these investments. And I think it's it goes in that direction, but there's a lot in Europe happening as well in that sense. And second question also related to that is, in your view, what are the triggers for this value inflection in the green economy?
I think it's already occurring to the extent that if you actually even just think about, I guess the starting point matters. But if you look at, I think about decades beginning as Jan 1st, 2021, and if you look at that starting point and you look at sector outperformance, tech isn't the one really leading here. Actually, energy is beating tech from that point onwards. But I think the regulation is linked to election, and who wins matters, I think, simply put. I think if you think about climate, Europe is leading America. And if you look at the European index, it has, because again, what's going to win in a climate theme is industrial sector. And industrial companies are more heavily concentrated in the European indices than the American indices. So part of my explanation for why European equities, German equities specifically, have outperformed is the fact that you have a world in which different sector composition is going to matter more than simply tech. And so Europe has that this is what leads to the non-US outperformance. I can see China outperforming the US on a 5-year basis, 3-year basis, by the end of the decade. We'll be shocked at what is going on here. Because again, if the scenario that we're seeing the highs for the year, for the decade, are around these levels is true, then that basically means between 2021 and 2030, American equities have done nothing for you. And yet the conviction is that you have to be in America. $40 trillion was invested in American financial assets over the last 3.5 years, post-pandemic. So it's quite incredible from a financial flow standpoint. So the sector winners are different. And because the sector winners are different indices globally, countries do better versus the US, I think.
So I think it's fascinating how you describe this pattern of decade-long trends, and it's an interesting discussion. What is the current trend, and right, is it climate or the American myth and so on? But someone said you need to focus on what's knowable and what matters, and there's no doubt that all these things matter, but are they knowable? Right? I mean, it's interesting to recognize a pattern in history, but while we are creating history, can we really know what's going on? So are we just having an interesting talk, or can we really know these things?
I think you can be positioned in a balanced way for it, right? Hence the idea of the Zeitgeist portfolio, where you buy NVIDIA, you buy Lilly, and you buy BYD. So that way you're hedged. It could be any one of them, right? So that was the thinking behind how do we know? We don't know. So you bet on all three and you'll see which one wins. And so far, all of them are doing really well. But I think the way I think about that is, Sherlock Holmes said there's nothing more deceptive than the obvious fact. And I think what I try to remind myself is lean into what is difficult. Lean into what is not obvious, right? So it's interesting that amongst the answers, climate was the least preferred option. And the reason I bring that up only is that if we were sitting here in 2012 and I was talking about the world, no one would have wanted to invest in the US. Because this is what America looked like in 2012. Responsible for the GFC. 2010, you had a financial mini flash crash, right? So you had a shaky financial system. Obama, increasing taxes, increasing regulations. Dollar, 50-year low. Credit rating downgrade. Into 2012, Facebook IPO, flops. It wasn't obvious that America is the destination you want to put your money. Back then, oil is above $100. Commodities are booming. Emerging markets, the narrative is deserve a superior PE because of their growth prospects. Emerging markets is where you got to be, not the US markets. But what happens? Exact opposite, right? And so, again, for me, it's more like what is not obvious and lean into that. And to me, the most non-obvious or difficult trade now is actually for people to accept that China needs to be an allocation. And people will be forced to make that decision and chase, because nothing changes sentiment like price. Again, 2012, nobody wanted to touch America. Now everybody wants to own America. Nothing changes sentiment like price. The price is different, the narrative changes, flows matter, and accelerate that trend. So it's not knowable, but there are clues we can, observe in the present and sort of make various bets, and then sort of lean more heavily on what may be not obvious. I think.
Thank you for sharing your ideas. That's the first thing. Second, I think you've started with you titled the presentation "Erring is Human, Forgiving is Divine," and you said that we're going to need a lot of forgiving in the coming years. So I wanted to ask if you did think that we would need forgiving in the past, so 5 years ago, if we had this conversation, would you have said that we would need forgiving going forward, or is this something that you just developed recently? The sense that we're going to need forgiving, the ability to forgive
Yeah.
going forward.
If I understand the correction, I think the question, I think it's more. I think one, that's a philosophy that I think should always apply, irrespective of where you are, what you're doing in life. But I think the markets have been very rewarding. We've been very bullish for the last couple of years, and that sort of served us well. And so, the key word for me this whole year has been patience. Just be patient. The market wants to go higher. Be patient. Let it do its work for you. Don't need to be rushed or cute. But now that the world and markets are behaving largely as expected, like I want to spend my time trying to think of other scenarios that could take place, and hence, me revisiting history and trying to draw lessons and apply them to the present. And the more and more I do that, the more I realize we're entering a difficult period. And the reason why I brought that quote was because I think it's such a out of consensus view right now that it'll be difficult for people to navigate this period, and they'll make mistakes. And then again, the self-forgiveness has to come in, and the compassion has to come in. And because again, if we're moving into a more difficult world, and you need help. I often joke that God is in a bear market. If you look at religiosity, faith, like globally, it's been declining. And so the ultimate contrarian trade is to just have faith. And I think you want to be long faith, belief in the next few years, for sure. When the world about you is sort of losing its moorings, and there's more volatility and craziness, politics and defense and wars and stuff happening. And not that it ever stops, but even more so now.
Thanks, Jawad. Very thought-provoking. This story that the America will not do well has been running around for a couple of years now. For me, the innovation leads to the growth and then the stock market performance. Should we infer that the innovation in the US side is declining or not happening?
I think there are two things here. One, I think the innovation of the future that matters, a lot of it is actually happening in China. If you look at the renewable supply chain, if you look at battery technology, if you look at the solar deployment, a lot of this is happening in China. If you look at robotics, it's happening in China. So I think there's a lack of appreciation of how far China has come innovation-wise. So I think one that is the fact that America is not the only center of innovation, and I think what America does really well is software. It doesn't do hardware very well, and hard tech is actually more a European thing than a US thing. So even from a venture capital standpoint, I would argue a European VC would do better than an American VC if it's hard tech and defense and climate we want to solve. So I think one, innovation is happening in China, and America may not be best suited for hard stuff. We're in a world again where you need materials and hard stuff. And then the second thing is America's attempt right now with the IRA to sort of reshore and build manufacturing capacity and build semiconductor capacity. It's already struggling, because the working culture is not the same as what people find in Asia. And so I would not be surprised if we hear or read stories a few years from now about how all of those plants that they're building are unproductive and wasteful because they're just not finding workers and building the sort of utilization that they hoped for initially, which is part of the whole declining empire sort of story.
Thanks, but that actually gives me an opportunity to ask, automation or robotics will not replace the workers? In sense, I was under the belief that a lot of automation is reducing the dependence on human workers in these new factories.
Again, it depends on what sort of products you're building, right, and what companies these are. I think the real promise of AI is not so much in augmenting workflow, but in replacing workers. And so I think that won't be obvious for a few years. Maybe after the next recession, it'll become more obvious, because then you're going to have to face staffing decisions, and you can decide whether I want to hire somebody or use AI for this function instead. And then, when do you crack the use of AI into sort of robotics to the point where they can replace workers even in factories in a major way. I mean, there's already automation happening in factories, but even to another degree. So I think it's come at a very interesting time because you already have aging populations, rising dependency ratios, poor demographics, especially in a country like China. So the AI robotics stuff is happening when it's needed most to take away some burden, increase productivity. So I think it's a positive.
Thank you.
Maybe in the interest of time, we'll proceed to the other room and continue asking questions in a more informal setting. So, Jawad, thank you so much for coming. Super interesting. For those who would like a copy of Jawad's book, it's available over there. Maybe if some people want you to sign it, maybe if you could kindly do that for them, that'd be great. But obviously, thank you so much.
Thank you, Bobby.